Forming a Section 8 company in India 1. Minimum requirements. To form a Section 8 company in India, you need a minimum of 2 members for private or 7 members for public, with at least 2 directors, private, or 3 directors, public, along with a registered office address. 2. Name approval. Select an exclusive name for your Section 8 company that does not resemble any existing company's name and adheres to the Ministry of Corporate Affairs naming regulations. 3. Digital Signature Certificate, DSC. Secure Digital Signature Certificates, DSC, for all prospective directors, as it is essential for online document submissions. 4. Director Identification Number, DIN. Directors must apply for DIN by filing Form DIR-3. 5. Drafting Memorandum and Articles of Association. Draft the Memorandum of Association, MOA, and Articles of Association, AOA, for your company, as these documents outline the company's goals and operational regulations. 6. Application for name approval. File an application for name availability in the prescribed Form NC1 with the Registrar of Companies, ROS. 7. License application. Fill out Form NC12 with director details, registered office address, and company objectives, then submit it to the ROS. 8. Approval from central government. ROC forwards your application to the central govt. If approved, you get a Section 8 company license under the Companies Act, 2013. 9. Incorporation. Once the license is granted, the ROC will issue a certificate of incorporation in Form NC11, and your Section 8 company is officially formed. 10. PAN and TAN. After incorporation, apply for Permanent Account Number, PAN, and Tax Deduction and Collection Account Number by TAN for your company. 11. Bank account. Open a bank account in the name of the company and deposit the minimum capital required, if any. 12. Compliance. Ensure compliance with various regulatory requirements, including filing annual financial statements and other statutory documents.